part of the first episode of what we're going to calling the Investor Collaboration or Investor Collab series. We just have so many great agents throughout Compass and outside of Compass as well that are just so talented in their markets, and they know so much about this. We have a lot of clientele moving in. I'm in Seattle, for example, that are constantly looking for investments and properties, and they have so many questions. And so a lot of us have shaped ourselves into becoming sort of these investor, psychologists almost, talking with people and strategists. So this is the first series. We are talking today with Lauren Leblanc, who is a good friend, awesome, in Austin, Texas. She leads a team called the Eleve Group. Did I say that right?
Eleve.
Eleve. It's French. Eleve. And then Deborah Morton, who is amazing, also runs a team with Compass out of Atlanta. What's the team name?
Clario Group.
Clario Group, that's right. And today we're just going to chat about some basic things because we could literally have a 3-hour conversation, but this is hopefully going to be 35, 40 minutes. It's going to go by very quickly. I did a series of these a couple years ago with many different topics, but this one's going to be so specific to investments. So we kind of put together some questions for you, and then hopefully people will chime in the chat if they want, if they have additional questions as we go. So why don't we just start really quick, maybe just do a quick background on, what you do with your clients and in terms of investment, just in general, if you want. Whoever wants to go first.
Well, I'll go first. So first and foremost, I'm an investor. So I have a dozen residential rental properties. I have kind of a formula of what I've found works really well. And not that we don't help investors who have other types of strategies, but my strategy tends to be a buy and hold strategy. So a long-term rental type situation. I do have STRs, but the majority of my portfolio is long-term tenants, 3-bedroom, 2-bathroom, sometimes 4-bedroom, 2-bathroom home, kind of in the outskirts and up and coming area. That's appreciating very rapidly. So that's what we typically help our investor clients buy. They're usually looking to buy wherever the entry level market is of, kind of right now. So 2 years ago, it was at 250. Now it's at 350, or then it was at 350 last year this time. And now it's like at 450. So it's moving rapidly, but that's generally speaking, and our rents are appreciating as well. But anyway, that's kind of the formula. It's a land value type strategy where we're looking to buy where the land is the most valuable, as opposed to new construction home where your value is mostly in that improvement. We're looking at where is the land the most value, and maybe there's even some room to improve that property along the way and add more value. So, but proximity to employers and really good infrastructure, good roads, easily accessible to grocery stores and decent schools and all the rest. So that's what I look for and what we help our clients to find most often.
Awesome.
Mm-hmm.
That's awesome.
Yeah. Deborah?
And it's so funny about your price points, Lauren, because I like 2 years ago, the last property I bought, I got for like 195, 3-bedroom, 2-bath, 2-car garage, suburban. And there's nothing in that 200 on the north side of Atlanta. Now the south side of Atlanta, it's higher risk going in. The schools aren't necessarily there, the infrastructure isn't, but it is developing. There's a lot of signs for on the south side where you can still get in early. Most of the investors I work with tend to look for the buy and hold. It's been interesting because there's so many hedge fund groups here now trying to be. So my clients who tend to have smaller portfolios, like the 8 to 12 properties like you do, Lauren, they're same thing. Their buy box is pretty standard, the 3 or 4 bedroom, 2 to 3 baths, and always with a garage in an area where it's safe, good schools, and they're going to find tenants who will stay long term. And that's pretty much the bread and butter that I've gone with. Now, we don't have a lot, like I get calls from agents all over the country frequently they want to find duplexes, small multifamily, things like that. And they're in short supply in our area. They do exist, but yeah, it's harder to come by. When they pop up, we have to move fast. There
has to move so quickly.
They do. So we had a duplex pop up the other day in a very appealing area in North Cobb County, and it was listed for $450. It needed a ton of work, but with both sides pulling rents, of $1,800, it would be worth putting the money into. But it was gone in a couple of hours. So watching for them all the time.
Wow.
Yeah.
Now here's some basic questions, just kind of to get people in the frame of mind of your city. So like when we say city and we say suburbs, or like, when we talk about that boundary, for us, it might be a half hour, let's say, but for you, what does that look like when you actually say those words to people in your area?
Okay, so in Atlanta, my office in Marietta is, our Compass office is in Buckhead. We have one in Midtown. It's 30 minutes, a little less than 30 minutes on an average to get from the Buckhead or Midtown office to my office in Marietta. Now, from there, I keep my office where I do because 30 minutes northeast, northwest of me, I can pretty much cover the entire suburban North Metro Atlanta area. I go 45 minutes to an hour, I'm at Lake Lanier. So lakefront properties are a possibility. During COVID, of course, that was a huge push for people to have second homes out by the lake. We have Lake Lanier and Lake Altoona, which are both commutable distance into the city. So that lake home, vacation home market is lovely. And now with everybody working remotely, people are getting a lot more use out of it. So from an hour outside of downtown Atlanta proper, you've got many, many choices.
Wow. What would you say, Lauren?
Just like what's within 30 minutes?
No, it doesn't have to be that. It's really more just giving us sort of a lay of the land in terms of what is proximity, because some cities are bigger, larger.
Yeah. I think that generally speaking, Austinites don't have a high threshold for long commutes. It tends to be, there's a lot of studies that say that you're happier if your commute is short in life, and Austinites are happy people. So generally speaking, I would say, often we get 30 to 45 minutes. People don't want to drive farther than that, but that gets you, to the places where we recommend investors buy mostly are just like north and northwest, and a little bit now northeast with Amazon coming in. Just those areas are within that commute time easily. So yeah, with traffic, it can be a little bit worse during.
I think it's fun driving through Austin because it feels like the distance I would drive to go to a coffee shop in Seattle. Everything is so close.
Lauren, you're spoiled.
Yeah.
Well, it's getting farther away because the traffic is getting a lot worse. Like we were driving around, I think it was on Saturday, and I'm like, we're going somewhere, and I didn't account for traffic on Saturday, but now I need to, apparently.
It's interesting for us with where the businesses have come in. Like we have a FedEx and UPS hub in Kennesaw, Georgia, right by McCollum Airport, which upgraded years ago. They upgraded so they can handle jets. So, but just by the mere fact that 30 minutes outside of Atlanta, we have these major distribution hubs. So all different price points. So like for our investors who are buying, it's a prime rental market. And then we also have in Kennesaw specifically, so we've got a university, we've got logistics hubs, and we've got a main transport airport right there. So it created a nice little pocket north of the city. So we have the same thing happening in like Lawrenceville and Cumming, Georgia, just north of the city. So everywhere around from the center, which I'm sure is going to happen to Austin at some point as well.
What
Yeah.
you're describing is happening. I mean, last year, Tesla built the gigafactory that's 4 million square feet large. And they've added 5,000 employees. I mean, it takes 30 minutes literally to walk from one end to the building to the other. It's
Oh my
so
God.
huge.
Wow.
Yeah, next time you fly into Austin, y'all should look, you can see it. You'll know, oh, that's the gigafactory. Yeah, and it's on a part of town that hasn't been, really very well developed, but now it's starting to explode because of proximity for those folks. So
I think
yeah,
that kind of takes us like talking about like the draw a little bit of, getting into that subject, obviously on a business standpoint, but what else do you feel like is like the draw to the area, not taking price out of it, taking the money part out of it?
so I actually found a quote about this that I feel like I want to share because it's perfectly describes what's happening in Austin. So this comes from the Austin Chamber of Commerce, but it says, Austin is a one-of-a-kind place that defies stereotypes. It is progressive and fiercely entrepreneurial, pro-business and pro-environment, easygoing and hardworking. The Austin region just won't welcome your business. It will make it better. So that's kind of like what's going on. It's like that progressive, but pro-business. It's drawing a whole lot of people in. Well, especially from California, as we all know. But yeah.
That's an awesome quote. Love that.
Yeah, isn't that awesome? I thought it was perfect but to me, I think personally, it's the people that when I first came here, it was like the people are so welcoming. They don't care where you're from. It's just like, come on, join us. We're having a party. And it's just a great, like the people are great. So, the jobs, obviously we had 49,000 more jobs in this past month than we did in February of 2020. So the jobs is a huge draw. We have a really active outdoor lifestyle and culture. People love that. It's pretty. We have lakes and vistas and hills and then just like the restaurants are great and the music. So just all that lifestyle and entertainment culture.
So the tourism business has grown a lot in Austin because of all of that, right? So the economy is good for the people who are moving there to work, but you also have this huge tourism. So like your Airbnb, you and I have talked about.
Yes,
Airbnb.
We're like the #1 place in the country for bachelorette and bachelor parties.
Mm-hmm.
Like rival Las Vegas.
More than Nashville, because Nashville's
big. Yeah.
Yeah, it's nuts.
Nashville's crazy. You can go out
right up there.
and you feel like you're pretty much at a bachelorette party and there just happens to be some other people around.
Yeah.
Oh my God. Okay, so translating this to trends you're seeing in terms of actually, in the real estate market with investors and people, like you said, there are hedge funds looking for properties.
Mm-hmm.
At the same time, there's people that just have stock money or something and they want to buy a second house or something to rent out, or how does that, what are you kind of seeing on that aspect?
So for me, it really depends. The first conversation with somebody who wants to invest in my area is about their long-term goals. What do you expect time-wise, and like any smart investor needs to be able to articulate to me what their goal is so that I can help direct them what part of the city, and also their tolerance for risk. So, the people who are maybe smaller investors who are, pulling from their retirement account to buy, 4 or 5 properties, I handle them with a different care level because they can't tolerate the risk as well as somebody who's managing a portfolio for a hedge fund or such. They have, deeper pockets and a higher tolerance for risk. So riskier, there's areas on the outskirts of Atlanta that are still developing. The Beltline has been a huge boon. It will eventually connect all of Atlanta, and the part of the Beltline where they're getting there, higher risk. You're going to be the early adopter. You're going to reap the reward over years to come. Now, if you need a safer strategy, there are plenty of opportunities in the suburbs for the, if you want to have a nice rental portfolio package that's going to hold you for 8 to 10 years. Your price points from 350, it used to be 250, but honestly, from 300 to 400,000, you can have some really nice homes, brick, 2-story, 1-story, solid homes built in the, from the late 80s to mid 2000s. Good quality in very good condition, because we don't have the harsh winters and it's just houses do well here. A good price points, and your rents, 1,800 on the low end, 25 to 2,600 on the higher end in the suburbs. And now if your focus is Airbnbs, your purchase price is going to be a little bit higher. And, occupancy rates are different based on what part of the city. If you're in town in the old Fourth Ward, going to be totally different than if you're going to be in a different part, let's say Midtown or Brookhaven and Decatur. Fantastic places that are developing and coming, higher price points. You want to invest at the $700,000 to $900,000 price point, you're going to get a lot more for your money, and your rents will be higher. And like it is everywhere, but the under $1 million. When I talk to people from Seattle and California, and their eyes get big when they realize that they could have 3 houses here for what they're paying for, or what they're selling a 900 square foot home in California for. Guess what? You get 3 houses here.
Yes. Yeah. It's great.
That was awesome. Lauren, go ahead.
I've lost what the question was.
I know, so did I. I was so excited.
Price points in the areas.
We were kind of talking about, as it relates to the real estate, the trends you're seeing.
Yeah. I was listening to what you're saying, Deborah, and Austin's really similar, but like slide the price point scale a little bit beyond, you said starting more like at 350, we're starting more at like 400 now. 400 to 500 gets you that starter home. Now and also built in the 80s, 90s, early 2000s is really where we focus. I love Round Rock outside of Austin. Dell is a major employer there, but it's also a lot of other great employers. They have a lot of Austin chains there. So it's got a lot of the Austin culture and a really cute, lively downtown. And it's still commutable to Austin. To a lot of the tech employers are north of town. So it works well for that too. And then you've got Samsung is building a huge plant east of Round Rock, and then Amazon's over there too. So I love that area, and there's more there. It's just a larger area, so you have more inventory. That there's not much inventory, but there's more possibilities of inventory. It sells fast, but you can find it more frequently is the point. And then rents are about the same in the like low 2000s. I have I prefer to help my clients buy 1-story homes as opposed to 2-story homes, just for a variety of reasons. But when you have, at that price point, you're going to get a certain size. And at that size, a 1-story home is generally designed better than the 2-story home. And then you also have lower risk when it comes to there's a plumbing problem that happens. It's just going to happen on, the first story, not 2. And so yeah, just like, and also just the market, we always think about, okay, with who's going to be the buyer pool when you go to sell it. And that's going to be a bigger buyer pool because more people can want a 1-story home. They're in higher demand here. They sell for more per square foot. Yeah. And so yeah. And, Airbnb, it's similar. It's like, if you want a short-term rental, we have some, political things to navigate because there's permitting and there's sort of certain areas you have to avoid, but really certain areas do better than others. And actually there's a big demand for this because lots of people love to be owners of Airbnbs so they can enjoy the city too. And also, and also like people, the hotels have gotten more expensive and people enjoy spending time in Airbnb. So there's fewer of them because the city has so many restrictions. And I'm actually an investor in a project outside of Austin, about an hour outside in New Braunfels. That's really unusual because it's a new construction community. It's like a ranch resort type community with mid-century modern cabins. And these cabins are selling in the 500s and 600s, but they're great Airbnb properties because, there's just nothing like it out there. And it's a destination for music. People love to come for music, to float on the river, to go fishing. It's just like a cute little place.
And isn't it like it's a community specifically for short-term rental, correct?
Yeah, it's short-term rental friendly. I mean, you certainly can buy one and just enjoy it for your personal use if you want to, but
Right.
there's
I mean, but
people
most
who
likely,
are,
people are going to be renting these out for the most part.
for sure, yes.
And that's just something we don't hear about, but this type of project is coming to your city. I mean, it's
It
not
is.
just there. I feel like this is coming. We hear about this kind of thing, almost a tiny homes concept, but like done well, and done in a place that's desirable. We have these places like this where we know that, and if we looked 8 to 10 years from now, I feel like that concept is going to be big.
Yeah, I think so. And with all the shared amenities, it's going to have lakes and pools and trails and all those things that people want to do and for a city like Austin, I mean, you think about like New York City, right? People in New York that live in New York City, you just want to get out of the city for the weekend. Austin's becoming a city like that. I mean, it's so congested and people just want to go somewhere for the weekend and it's only an hour away. So it's great for that. Yeah.
That's so funny. I actually grew up like a lifetime ago in northern New Jersey in a tiny little town that was exactly the type of community that you're building right now, Lauren. And we were the year-round people. There was very few of us, but it was a summer home community for the residents of New York. And I mean, this was way back in the early 70s when that grew way back. But it was a great place. It was interesting though that this concept of having this resort home outside of the city to go to. So like here we're seeing it at Lake Lanier and in the North Georgia mountains, the same thing. Where, I mean, people it's not unusual for people to own 2 or 3 homes and then have at least that second home rented out as an income producing. Now that Airbnb has made it, or VRBO, either one, it's just become much easier with the internet to have that rental income managed well.
Yeah, and people, it doubles too as there's a second home plus an investment, which is why not? Why wouldn't you want to do that?
Well, let's transition into some of those more specific rental type things like what do we see as typical in the area for anything you know about in terms of property taxes, like what does the property taxes look like purchasing, deposits, first and last month rent, notices to vacate, utilities, like some of these basic things that we take for granted where we live, but they might be different everywhere.
Yeah, sure. So I would say I am a strong believer in having a property manager. I don't manage my own properties. I have a property manager, and typically that cost here is 8% on average, 8% of the monthly rent. And typically you're going to pay 1 month's rent to have that property manager find, vet, and secure the tenant, write the lease, the whole bit. And then you were talking about so we don't do last month's rent. We do a security deposit that's equivalent to 1 month's rent. So they pay the first month and the security deposit up front. We have pet deposits here. Everybody has an animal in Austin, usually a dog. And so we usually have a separate pet deposit, or sometimes there's a trend in like pet rent where it just adds a monthly, small monthly fee to that rent. And then, tenants pay utilities. Our utilities aren't that much, a couple $100 or something along those lines. And generally speaking, tenants maintain the yard unless the yard is, above standard and the landlord really wants to maintain it nicely. If there's a pool, I usually recommend the landlord maintain the pool. Yeah, what did I miss? Anything?
No, I mean, it's funny, like talking, like the other day, for anybody who's listening, we had a great conversation with a bunch of people masterminding, and we had, I think, Austin, I think we were talking about Florida, and up in Boston, and there was some different, activities and different restrictions, and it was, this is why we're doing this. So it's kind of just a basic question, but sometimes not so basic.
Right,
It is,
that's true.
it is interesting, the variances. I think in general on both coasts, there's just so much more regulation. Like where I am, it's I mean, it's certainly not a free for all, but it's not as restrictive place to do business as like my friends in Boston have to deal with, for sure. Yeah, so very similar. If one property, you're going to pay 10% to your property manager. I also am a proponent for having a property manager, that level of separation between the owner and the tenant. If you have multiple properties, you can certainly negotiate. I've seen 8%, and I've seen less. For over 10 properties, you can certainly negotiate a better deal with your property manager. First month, pretty much what Lauren said is the same. Where we have some variances here will be in, depending on what city or county you're in, is taxes. There are some big variances from like the city of Atlanta, Fulton County, Cobb County, and then all of the smaller cities within the counties. When we were talking about the up north, sometimes they have townships instead of counties and cities. So that's different. Here, we basically have, you're either in city, and I'm not just Atlanta, but like the city of Duluth, the city of Brookhaven, they'll have their own city taxes. And then there's county taxes as well. So that has to be factored into, the whole investment package overall. I have several clients there are different areas. I think what I'm realizing is it's unique in Georgia. It's pretty customary for a lot of my clients who have rental properties, if they're in their primary residence in our area and they're a senior, they don't pay school taxes. So being familiar with the tax rules and regulations, now that's not going to apply on an investment property, but for somebody who is considering moving to the Georgia area, different counties have significant tax benefits if your primary residence, and it's not nearly as complicated to have investment properties.
That's pretty cool.
So in Austin, it's generally speaking, on average, about 2.5% are property taxes, which for most people in the country are like, that's high. And we don't have a state income tax. And that's why this is where our schools are funded. So the tax rate can vary considerably depending on the school district and what other taxing authorities are layered into it, right? So if there's a MUD or anything like that. But what I usually, the concern for investors, like, okay, that seems high. Yes, but our appreciation rate is also very high and more than covers that property tax amount. So yeah, what would you say is the range in Atlanta?
So it is when I pulled to get numbers, it is so significantly different from city of Atlanta and Fulton and into Cobb and then further north. It's quite, and we do have our state income taxes. So in general, I mean, it's all over the board. When I pull a property, you're like, wait, I thought that was, within the city limits, and it'll be different. We have so many little cool cities pocketed around, and, like the city of, one city will have its own police and fire, trash service. The services you get, my point is the services you get vary greatly in each of these different communities. So, I mean, basically, you know, if there's a different area, you give me the numbers that you want to stay in and I'll eliminate some specific areas for
That's so
you.
interesting though. I mean, you don't hear that very often. I mean, for
Yeah.
us, that would definitely not be the case. You're going to have that everywhere you go.
Yeah.
The rule about the no taxes for the seniors, that's great on schools. Wow, that's amazing. Didn't
It's
know
a
that.
huge savings. Like I'll pull the property for somebody and be like, oh my gosh, they only paid $900 in taxes last year. Oh, well, they're 70 years old. So, you know, they've not had any school taxes to pay since they were 62. That's a huge reason for people to stay in their homes. I'm like, time to go. I need a house to sell.
Now, is it typically single family homes there? It's not really so much condos or townhouses that you know, at least recommend people, you know, looking into more so, or that are investment properties for a lot of people? Just because I know that varies. Like, for example, I spoke to my friend today. He's a Canadian resident. He goes back and forth between Vancouver, Canada, here on the West Coast, and back here. And he sent me a picture today. He just came back from his friend's 50th birthday party, and there's these towers in Vancouver that's ridiculous. At one point, 4 or 5 years ago, these were over $1 million per unit, these 30-story towers, and there's multiple of them. And 65% of them were not owner occupied, just parking money. So, I mean, in some areas, you know, downtown, that type of area, but obviously I know it's very different where you might be. So I'm curious, what would you say?
Well, it depends because of the variances and HOA fees on, you know, I'm certainly not going to say it doesn't happen, but between the short-term rental restrictions that are turning up, like it's serious. You know, 5 years ago before COVID, Airbnb was newer and it was a lot easier, but now we have rental restrictions everywhere, rental caps, and on the attached townhome communities as well. I mean, if there's a rental cap with a wait list, you know, that's just off the table for an investor. It's just not going to happen. So
I'd like to just jump on this one too. I was talking about how I have my investor clients focusing on land value. This is the same conversation we have when they ask, well, what about condos or townhomes? You know, the value, you're looking for the value to be in the land. And when you own a condo or townhome, you're owning a very small percentage of the land. And most of what you're investing is in that improvement. And that improvement has a lot of costs to deal with maintaining it, which are, you know, those HOA dues that come every month are expensive, and the tenant doesn't pay for those. So the investor pays for it. So it's quite expensive to do that. That's not to say people can't make money with condos, because I have seen people do it. But your timing has to be so perfect. When, you know, if you buy into a new building and, you know, you're going to have like that for the first couple of years, that the sales are going to do really well. But as soon as there's another new building to compete, it's like everybody jumps to that one. So it's this constant, like, if it's the supply and demand, it gets all wonky when you can just create new supply. Whereas with single family homes on land, you can't just go create more land. And that's what in Austin in particular, you know, I talk to people in other markets, like especially in, you know, Mexico or in Europe, this is like everybody just buys an apartment, right? Well, here, you know, everybody wants land. They have dogs, they want a yard, they have kids, they want to walk around the block and you know, maybe have a community pool or something like that. Like that is what people want here. So I always steer people away from the idea that a condo or a townhome is going to be a good investment, because a single family home is going to win over all the time in Austin, Texas.
Well, and for us, not to mention, you know, back to their long-term goal, we don't know what the market will be when it's time to sell.
Right.
You know, and if their plan is 10 years, at 10-year mark, what will those association fees be at that point? And the owner doesn't have a lot of control over that. That'll be determined by the group through the HOA. So if it's time for, I don't know, replace the parking lots and you have your special assessment over time. So for the longer term investors, in my area, I am with Lauren on the, you know, stick with the stability of the land value. Not that it doesn't work, but
No, it makes the
Well,
most
and
sense.
I had a condo, a client who was selling their condo downtown, and their timing was such that we were talking about one number, like in this early in the pandemic, and then the pandemic, this affected things to the tune of six figures. Like they had a major impact because when the timing was right to sell, there was like 6 months of inventory when there was nothing, no inventory on single family homes, and the market was super white hot. And the downtown market was just stagnant. Nobody wanted to buy a downtown condo at that moment in time. Now it resolved a few months later. Like it didn't stay like that, but it was the people at that time were like, I don't want to buy a condo
It was so
downtown.
extreme. It was so extreme.
Yeah.
Even a client that I had, we lost probably 80,000 from when I told them where they could list it at, just because of
Mhm.
everything. And some people
Yeah.
weren't even able to sell their units. It was that bad with a lot of people.
So it's funny, I sold a little studio right across from Piedmont Park, tiny, 200,000 4 years ago. Now, it was for the families, uh-oh, we're frozen.
We're frozen. Are we back?
I'm back. It was, they bought it for themselves because they just travel in and out of, it's a studio, not a building that allows short-term rentals. So he was satisfied with it, but the location of it alone and the cost, because it's a small building, it is still perfectly affordable to him. Well, that 200,000 has definitely appreciated to a much higher level, but it works for him. He's not looking for Airbnb income on it. It's when he travels to Atlanta, he's got his own place to stay, doesn't have to deal with a hotel, and the location is perfect. So again, that initial assessment with any investor,
Yeah.
that's where the money is. You have to make sure that you're clear on your goals.
So what, we had a good question that we came up with, which was, in terms of people, what are the strategies and what do you recommend for them? The long-term hold, the cash flow versus appreciation, cashing out strategies. Like what do you have to say on that as we wrap up pretty soon, by the way?
Well, my strategy is probably the worst strategy a realtor can have, because I'm like, don't ever sell. But it does work. And now I try to, anytime I have a seller that was like, I want to sell, I'm like, are you sure? Because if you can keep it, keep it.
Yeah.
But that's my personal strategy is a long-term hold, like forever, probably, maybe. And I pull cash out every now and then when I have enough equity, like a chunk of equity. So I find that a lot of investors are so hyper-focused on cash flow, like, oh, I need the cash flow. And there are some times where investors need to have a monthly cash flow. They're retired or they need that income. However, the way that I look at it is that if I have cash flow, I have taxes to pay. And if I don't have, monthly cash flow, the P&L is more like a break even or slightly positive, then it's the balance sheet that's positive, that asset is growing in value significantly every year. And I can pull that equity out in chunks as opposed to cash flow. When I do a cash out refinance, I pull it out in a chunk and I'm not taxed on that money. So that's the strategy that I really like, and I've done really well with. I've been able to multiply things because you can continue to keep it leveraged. The leveraging is what maximizes that investment and makes it really grow exponentially. So that's those are my thoughts there. There's all kinds of strategies, but that's my favorite one.
I like your strategy, Lauren. So my recommendation is to make sure you have a great CPA who's advising. I'm not a tax advisor, but I think the tax strategy is key for every investor. So it's, again, know the long-term goal, have a good tax advisor to work with, and then we put a plan together for what your needs are. Lauren was far more articulate about that one.
No, it was great.
No, it's true. You really need to have a good tax advisor. I mean, we are not the experts in those things, right? Like we can help you with what the real estate side of it, but in terms of the liability and the taxes and anything else, property management even, I don't get too nitty gritty with that. Like even having I heard this analogy the other day, and I feel like it's really true for real estate in particular. Like if you have you've hired an investment firm to actively manage your investment portfolio. It doesn't mean that you're not checking in with them and making sure that they're doing, that they're working in your best interest and they're doing all that. It's the same with property management in real estate. Like, yes, you want it to be more passive that way, but to keep checking in on them and making sure they're, like my property management manager is really good and it's somebody I have a personal relationship with. However, they still tend to not be as aggressive with raising rents. Right now our rents are lagging behind our sales, or what our sales prices are. And so, there's still no rental inventory. Like it's hard to find that. And so they're not being as aggressive and they're recommending lower. So I make sure and like, hey, check in with me before you offer something. And then I'll say no, if the average rent is, $2,100 and they're paying me $1,800 right now, and they want to raise it to $2,000. And I'm like, why wouldn't you raise it to $2,100? And they're like, well, they might leave. And I'm okay. They're like, you have to kind of balance it out. But in that instance, we got it. They agreed to it because they can't find something else. And so it's making sure that your manager is doing everything they can for you. Because, it's a hard business, property management is, and keeping everybody
Not
happy.
to mention, your property managers seem to have different ideas on when improvements need to be made. So I do advise the people, especially in the single family homes at a certain age, there is the routine maintenance that if your property manager is slack on, it will hurt you over time. And that's just like common sense.
And on the flip side of that, if they're doing everything the tenant asks them to do,
right,
you're not going to have any profit at all.
Well, let me answer this right here, because this is something I wanted to make sure we discussed. So, for example, we have a lot of problems with properties that are on market that are looking like an investment, that they were obviously rented out. Zero deferred maintenance, zero maintenance has been done on most of these. A lot of them have no updates almost whatsoever in the last X amount of years. Are you seeing this kind of thing?
oh yeah.
And what are you feeling are some of those updates, that, I mean, obviously there's some kitchens, baths, things like that, but what are you finding?
I'm into the sexy things like roofs and HVACs and furnaces. It's a hot. When I see a nice shiny new water heater, love it. I don't care. Granted, whatever.
Doesn't matter. Water heater, super excited.
Yeah, you have to be careful with that. I mean, what you're saying, Julian, is really true, because it's like these investors who have held those properties long term and haven't done any maintenance, and then they're cashing in on their portfolios, and you go to try to buy one of those and you're going to have so much cost to get it, on things that tenants don't pay more money for, right? They're not going to pay more money
it's all on
for a new roof or replaced siding, or they're going to pay more money for new floors or new counters or things like that. And if you have to spend money on that other stuff, it's, you want to be making sure you're getting a really good deal from that house.
Well, and it also goes back to what's your length of hold strategy, what your plan is. If I'm selling to Lauren, who's never going to sell the property, we have a little more wiggle room in how much I'm going to ask her to invest.
Yeah.
True story.
Good point.
Well, all right.
And
So
like the appreciation rate, like in where we're looking at overall 18% 12-month appreciation. Nobody expects that to be what our future looks like. But,
right.
When I touched base and sent reports to everybody who bought in the last, 5 years with me, they're shocked. So I am sending those reports to my clients more frequently now. So quarterly, everybody's getting an update on what their estimated value is, because they may decide to, hey, it is time to go ahead and improve the flooring or do some improvements, because they can, whether they cash out pull some cash out, or it's just a smart time to invest. Those recommendations we can help with, but I'm not going to step into tax advisement.
Yes, so much fun. Okay, last question, and then we can open up whatever. What are your expectations for, the next 18 to 24 months? What would you advise somebody if they were your client today? Maybe offer a scenario if you want, but I think that would be important for people who watch this.
Yeah, my best advice is, I've seen people make mistakes in hesitating. Like, don't hesitate. If you want to become an investor, don't wait another day. Like, do it now, because in a year from now, you'll be grateful, as opposed to don't be regretful in a year. Our median price has gone up 30% in a year. And a lot of people think, well, that's crazy, you can't sustain that. And I agree, you can't sustain that, but it is likely going to be close to that again this year. Probably it's going to go up another probably 20% is my,
really?
Yeah, that's my best guess. And so that's an opportunity, right? It's an opportunity to take advantage of a highly appreciating market. And we're just growing up as a city. It's just, so yeah, I'd say don't
What's
delay.
the cost of waiting?
What's the cost of waiting, right? Yeah.
People want to quibble over like a 1 to 3% on their offer price. And I'm like, in 2 months, your 1 to 3% is covered. So
Yes, exactly.
the best time to buy was last year. The second best time is today.
Mm-hmm.
Oh, I love that. That's really good. What would you say, Deborah?
No, that's pretty much it. It's
it?
now is the time that at the rate of appreciation. Plus, we're tracking appreciation rates on housing and land. The rent increases, the supply shortage that everybody's talking about. Our rents are, they're certainly not going to go down. In fact, as mortgage rates go up for these home buyers, the rental market just increases. There's a lot of home buyers who are unsuccessful at purchasing. And, is it because all of these investors who are snapping up these first time buyer homes? Maybe. But what it's causing is a bigger demand for more renters, people who want to buy, who are not financially able yet, who thought they could, now they can't, and they have to go back into the rental pool. So I don't
That's a really good point.
Yeah, I just don't see any shortage of quality renters. These are the kind of people you want in your investment property. They can't find a home. They've looked for 6 months. They've got to have a place to live, so they're finding a rental.
The other thing that I just want to throw in here is that for our clients or anyone we know who are moving up, like they are moving out of their starter home, what we're encouraging them to do is keep it as a rental. Like, don't sell it. Pull some equity out of it and use that to buy your next home. But then you've got, your first investment property if you haven't started into investing yet.
Or if they need the equity from the home, like I'm partnered with multiple investment buyers at this point who I can, when I go to meet, they're thinking about selling. We can sell it outright. I can present it to the investors that I work with for a healthy These are not lowball offers right now. So our investors are paying a fair price because they're getting an opportunity before it hits the market to purchase a quality home. So for if the homeowner can't keep it as their own first rental property, they can get a decent price. But that's how we're doing a lot of matchmaking right now with the investors in our circle. So
what and just again for fair notice, we know our cities so well. We know some of these areas that are mixing it up right now that are going to be early. If you want to just throw out, a few areas that you would tell somebody to potentially invest in that has, $400,000 to $800,000 maybe. Let's just use that example. And they want to buy 1 or 2 things. Where would you send them?
Well, I've already said Round Rock. That's still my number one. Round Rock, the the part of town that's where Tesla is, and Pflugerville, like that, those areas kind of all along the north and the east side of town are really where we're growing the most. So.
Mhm. So for us, an interesting place that is fascinating for me to watch is College Park. It's near the airport, and it used to be a less than this. I mean, some parts of College Park are right in the flight path of Delta. However, it is really starting to explode. Decatur, Duluth, anybody in Atlanta who's watching this, as I say this, Hiram used to be not desirable at all, but because of the close proximity, the easy access to the airport for people who commute for a living, super low taxes, lots of space, really large yards and areas, and the schools have improved immensely. Cherokee County as well, Ball Ground is an up and coming place. So there's lots of different areas all around the city. Atlanta is still a great place. I mean, everyone in the country is learning that Austin and Atlanta are the places to explore.
It's like you hear the same names at the party.
Yes,
That's right.
So much fun. Well, we don't have a bunch of people on today, but if anybody has questions, feel free to write them in the chat. I know Dana's joining us today. That's really great. A couple other people said hi earlier. But I mean, honestly, overall, I think we answered so many questions in such a short amount of time, and it's like really high level stuff. So going into a deeper discussion, I know, we could do that all day long, which is how this started. So
it
Thanks
is.
for hosting this, Julian. This has been great.
Thank you so much for having us. And I'm looking forward to see, I know you've got some great other city partners coming on. I'm very interested to hear how your Florida conversation, because the proximity from Atlanta to the Florida Gulf Coast and the Atlantic Coast, and then Nashville as well. We have a lot of back and forth between these areas. So I'm excited to hear your next one when you present our partners in Florida and Tennessee.
And Charlotte too. Those guys
And
are on.
Charlotte. Oh my gosh, yes,
That's
absolutely.
another discussion with Mike and Scott over
Yeah.
there. But
You know what? I recently met someone who's in the wealth management and private equity world, and he said that the number one indicator of a city, like where they're headed and their economy, is their airport. If their airport's growing, and apparently, so Nashville and Austin have some of the fastest growing airports in the country, and and Nashville has it's very kindred with Austin in a lot of ways. I'm curious to hear more about Nashville too. So
Nashville is exploding. The people I know there that are agents, literally they're having to pick and choose. Their teams keep growing at an exponential rate, and they're just like, I don't even know if I want to be this busy.
interesting.
Okay.
Not there yet.
All right, we are off. You're going to enjoy probably a late lunch or even dinner soon. I'm going to head out to lunch here pretty soon on the West Coast. Love you guys. Thank you. And we'll see everybody next time.
Bye.
Thank you.
Bye.